Good afternoon, ladies and gentlemen. It's Jesse Colombo, Cyber Trading University's Forex and Futures instructor. And I'm looking forward to having John Ondercin from WinVesting on our closing bell today. He's going to be teaching us how to find trades that happen at a specific time, like clockwork. He's also going to be showing us and walking us through specific time trades that you can start trading live the next day. And he's also going to be showing us optimal entry and exit methods for the trade. And he's also going to show us where to put our profit targets and stops and how to minimize our risk automatically, as well as how to find other time trades around the clock that are consistently predictable and only take 5 to 10 minutes per trade. So thank you so much for coming on our closing bell, John. I'm looking forward to it. You can share your screen when you're ready.
All right, I'm all set. Can everyone see my screen?
Yes.
Fantastic. All right, Jesse, I'll take it from here if that's all right.
Sounds good. Thank you.
All right, thank you. And thank you, Cyber University, for having me on today. Appreciate it. I hope to make the best use of our time for the next hour or so and make sure that you get some good content that you'll really be able to take away and use for your trading. And I'm sure you learned a lot of great things at Cyber Trading University, so this will kind of just add on to also the other good stuff you've been learning. And I'd like to say a shout out from Lake Minnetonka, Minnesota. Looks like we got some other Minnesotans in the audience today, so special welcome to those people also. And so we're gonna have a lot of fun tonight. You'll find that I'm a pretty straight shooter, and I kind of get to the point, and a lot of people appreciate that. So I think we're gonna have fun today. So, how to find trades that happen at specific times like clockwork. And you gotta understand, I'm the kind of trader where I want to trade when there's action. I want to trade when there's things going on. And I personally like trading the first half hour of the trading day. Why? Because it has a ton of volume. It has a ton of price movement. And it's funny, it's called amateur hour. Well, it's called amateur hour for a reason, and that's because amateurs trade it and just get slaughtered, where the pros and the insiders like myself have a good time because it's very predictable and it's pretty much the same routine day in, day out, and it's a great time to make money. And I'm going to show you a good trade that I like to do most mornings if it presents itself that is very easy to do, keeps within our stops and targets, and it's low risk, and we can manage the trade properly and get plenty of volume with what we trade, so things go pretty well. But before I get started, I have a question for you. And the question is this: why aren't you making more money day trading? Now, some of you may be doing really well, some of you may not be. And for those people who are not doing well, I want to address real briefly the top 7 mistakes most day traders make. Now, you could have a top 20 list, I know. But I'm just kind of focusing on a few things that I really think that are crucial that you might want to look at. Number 1 is they trade all day long. Now, I don't know about you. I just can't sit by my screen 6, 8, 10 hours a day. There's people who trade pre-market, then they trade the whole trading day, and then they trade post-market. That's real long. And let's be honest, can you really stay at your best, at a peak state, as Tony Robbins would say, and do your best all day long? It's pretty tough. Some people are just on in the mornings, and that's when they're doing their best. And some people around 1 or 2 o'clock in the afternoon, they get revved up and they're at their absolute best. And let's face it, trading is like the Super Bowl every day. You got the best of the best traders out there, and you got to be on your top game to trade. So I would recommend finding that time frame that just works best for you, where you're at your best, and focus on those times and only trade. And it might be 6 in the morning to 8 in the morning. It might be 9 in the morning to 1. It depends upon your personality. But try to find that time frame that works best for you. And let's go to the next one. They lose on a few trades and stop trading. You know, the funny thing is there are a lot of good trading systems out there, but the problem is a lot of it's just statistics, and you're going to have streaks of winners, you're going to have streaks of losers. And I'm really right now out there to encourage that new trader out there that, you know, may not be getting the system right, but they're just having consecutive losers. And I don't want you to just stop trading. I want you to, you know, move into simulation, obviously, so you don't lose real money, but don't give up, because you know, it's going to take you hundreds and hundreds and hundreds and sometimes thousands of trades to get the trade down. And just because you lose 2 or 3 trades in a row doesn't mean it's over. So this is more of an encouragement, because, you know, it's kind of like at bats. If you're a baseball trader or a baseball player, you know, you're going to have losing streaks, you're going to have winning streaks. But what's your batting percentage? And that's really what you are as a trader. So don't get discouraged if you lose. Don't stop trading. This is the best business to be in, because, and I can go through a whole list of great things, but I tell you, there's nothing like being your own boss and trading when you want to trade. Third is they learn a new system and they start trading real money right away. That's the furthest thing you want to do, because you know, for some people, they got to start making money now. They got to start producing income, where, you know, this is a business. And, you know, let's face it, if you were to like buy a McDonald's restaurant, do you know that you can't just buy a McDonald's restaurant? They won't let you. What do they make you do first? Well, they make you work at a McDonald's for a year, 6 months to a year, in all the different positions, learning the system before they will let you buy a franchise. Well, it's the same thing in trading. I mean, you've got to learn the system. But the thing you don't want to do is start trading real money. You want to start trading in simulation. Ninja Trader, if you're familiar with Ninja Trader, has a great market replay. eSignal has a replay system too. But practice your trades in simulation and get really good first. The money will come. You just got to spend the time and get used to what the system has. And it has flukes, it has nuances, and you just got to nail them down. Fourth is the trading with the wrong tools. And that's where I want to really encourage you to use leading indicators instead of lagging indicators. And you know, I'm not going to get into all the different types of indicators out there. Let's face it, all indicators work some of the time, but there's other indicators that work better than others. And I want to kind of steer you towards indicators that are future telling than historical telling. And, you know, moving averages are great, but I use them more towards, you know, defining trend. I can get into a whole bunch of different indicators. I'm not here to bash any indicator, but what you got to learn is that certain markets require the right indicator, and other markets you got to use different ones too. And if you're losing too much and you're using the wrong indicator, you're not using the right tools. And it's really important to have the right tools when you trade. And also, they use subjective indicators. And, you know, a lot of people like, let's say, stochastics. Well, stochastics can be pretty subjective because it can flip around on you. I like to use indicators, you know, such as Fibonacci or CCI, or indicators that show me the future versus show me what happened in the past. And that could be a big reason why you're not making money, is you may not have the right indicator. This is probably one of the biggest reasons why people fail, other than being underfunded, that I think, in trading. And the problem is they don't know their time frame. Well, what do I mean by that? Well, you see, not everyone's supposed to be a day trader. Not everyone's supposed to be a stock or option trader or a future trader. And what people don't know is what their time frame is. Do you ever get into a trade and you feel a little bit uneasy, or you feel that, well, these trades are just happening too fast? Well, some of you trade in the microsecond time frame, where they get in and out in microseconds. Maybe you should be trading a system that happens in a 5 to 15 minute time frame, where you can get in slower, you can get out slower. Or maybe you should be in something that happens in 2 or 3 hours. And the system they have doesn't really meet their personality and their time frame. And this is what I find to be the biggest problem with a lot of traders, the reason why they're not making money is because they're in the wrong time frame. Maybe you should be trading every 2 or 3 days in swing trading positions. Or maybe you should be trading once a month. You got to find that personal time frame for yourself. This is the 7th one, and I could have probably 20 of the top mistakes people make, but this to me is a really big one too. And this one is proper risk-reward ratio. And hopefully people have talked about this to you in the past. I'm sure they have. But here's the thing. If you're going to be trading at minimum, if you're going to risk $1 on a trade, you better make $1 on a trade. So my risk-reward ratio is 1-to-1. Now, I like to see, ideally, a risk-reward ratio where you risk 1 to make 4. And the statistics say over time that if you don't have a minimum risk-reward ratio of 1-to-1, it will be very challenging to make money with your trading system. So take a look at that. Take a look at that's not occurring with what you're doing, and set yourself up for success with a proper risk-reward ratio. And there's a lot of good courses on risk-reward ratio. I'm not going to get into it a whole big detail. This is a whole course in itself, developing risk-reward ratio. R values is what they're called. And it's important that you keep this in mind in your trading. So with that, I'm going to move on to my next discussion. And so these are the 7 common mistakes you're probably making. And, if you're placing more losing trades than winners, repeatedly giving away your hard-earned profits, blaming the market or yourself and not whatever approach you've been using, you're probably looking for a better trading system. So I'm going to show you what is called the opening price trade. And this trade I've been doing for quite a while. And I'm going to bring up my chart. Actually, I'm going to give you an abstract view first, and then I'll show you a trade with many examples on the chart as far as the opening price trade goes. So you're probably aware that when you're trading in the markets, it's an auction, and it's an open auction. And when the market opens and during the entire trading day, does anybody know what the most important price is on your chart? Does anybody know? What do you guys think? What's the most important price on your chart during the trading day? Well, a couple of you are answering the right way. Opening price. Yeah, absolutely. It's the open of the auction. And I will show that to you for those of you who want more information on it. But yeah, opening price is the most important price on your chart. And the funny thing is opening price tends to be one of the most critical values based on a lot of indicators, a lot of systems, from pivot points to market maker levels to a majority of indicators out there. Opening price is a key factor in their indicator. And even more so, opening price is important to the people on the floor who trade. I got a white screen right now, so thank you, Jesse. Why don't I put a chart up just for, actually I'll start drawing, I'll make it a little easier. Thanks. So, so first of all, this vertical line represents the open. And this can be the open on, wheat, corn, the S&P 500, whatever you want to trade. And let me bring you back to a little bit of history. And that's when the trading floors were open, and we've seen the close of a lot of trading pits over the last few weeks and few years. The good old boys club and the people on the floor, opening price was paramount. yesterday's high and low, the basics. That's all they did was the basics was extremely important. And it so proves so today that opening price is a key factor. And what you'll notice is, let's just say for fun, and I'll use this green line because on all my charts, I use green as my opening price. Let's just say this is opening price, right? And I'll label that opening price. Opening price tends to be, let's just say it's kind of like a brick wall, and it's a fortress. Because here's what you'll notice, and I'll show this to you on any chart you want to bring up. Okay, I'll get to the question. What about Forex, right? Any Forex traders in the room? Forex is a little different because it is 24/7, and I don't trade Forex, but is there really an open on Forex? I don't know. I mean, 24/7, it's always open. But what I'm talking about now, and for all intents and purposes, so we're all on the same page, is the 9:30. I'll put it down here. The 9:30 Eastern Standard Time open on the Nasdaq and the New York Stock Exchange. Okay, so what I've seen and experienced and everything else is opening price tends to be a brick wall and a very important level when it comes to trading. And it's one of those things where price will tend to move. And here's a typical day in the morning. And when I draw a vertical line like this represents a 1 minute chart and 1 minute going by. But generally, the price will move up, right? It'll come back down. And opening price, and I'll tell you, it's funny. Opening price will act like a brick wall. So picture this green line being like a brick wall, and I'll draw a little brick wall right there just so you can visualize what I'm talking about. So here, these are bricks, and I know my artwork is not anything like Van Gogh or anything spectacular, but this is a brick wall. If price goes in one direction, let's just say up, there's now been created a brick wall at opening price. That's how significant it is. And this brick wall can continue all day long. When price comes down, price is going to run right into this brick wall. And generally what happens, ladies and gentlemen, when price hits a brick wall? Well, it's kind of like physics, right? An opposite reaction type of thing. What takes place? Well, this brick wall gets decimated, but price tends to revert and move back up. So the brick wall will get broken down and price will come right back up and bounce off there. So what do you have after that takes place? Well, you don't have a brick wall anymore, and you have a clear path through opening price. So what I like to do is, and there's ideally two setups on here, is I like to, if price is getting close to opening price, I know that somewhere around here I have a great short opportunity. And this can be anything. It can be the S&P 500, it can be the Russell 2000, it can be oil, which is also known as the CL. It can be the NQ. I mean, I can go on and on and on, right? Whatever the open is on that indice, future, bond, whatever, it doesn't matter. ZB, oh, fantastic when it comes to the ZB. I don't know if anybody trade the ZB in here. Great thing to trade. You know what? Honestly, the most exciting thing to trade that out there, and in my opinion, is the ZB by far. And that's a whole other webinar. The ZB is just king. It's paramount. Do you know on the ZB, and I don't know if you guys, some of you guys a lot of you might know this, but one tick on the ZB is equal to $31 and was it 25 cents? It's one tick. Not bad. And the margin is $500. So it's pretty cool. But getting back to the subject matter, this opening price is acting like major support. And I'm not going to say all the time. I hate to use absolutes when it comes to the market. But most of the time, price will bounce off that area. The ZB is the 30-year Treasury bond, Richard. So I love it. So I know that this area, the opening price, is going to be a huge area of contention. So it allows me to take a very strategic trade in the markets. So here's what I like to do. And I'm going to clean this up completely. So here's what I like to do, ladies and gentlemen, and I'm just going to show you the abstract form of what I'm doing, and then I'll get into some actual charts, and I'll look at today's charts for heaven's sakes. Well, because I like to look at stuff today. I mean, everyone likes to give you examples. Oh, what happened 3 years ago? Well, let's talk about today, right? Or the last week at least. So if this is the open, which represents 9:30 Eastern Standard Time, and then we have the opening price, which is this green line. This is kind of like a balancing act. So if price were to shoot upwards and move higher, like so, I know that this is major support. And I can then place a trade on the other side, 1 or 2 ticks below. And I think everyone in here knows what a tick is. It's the smallest increment of the future or index you're trading. You're gonna put a short in 1 tick below, short below opening price. Now, a lot of times price will come down and then bounce up, and then the second time through is when it moves, and it's a great way to trade. And guess what can else happen? Price, once it breaks through opening price, will tend to trend all the way till 10 o'clock Eastern Standard Time. So you can have 15, 20 minutes of trend on a trade, which helps you with your what? Your risk-reward ratio, right? It's huge. So let me ask you guys a question. What's the most important thing in real estate? If I have a house and it's right here, what's the most important thing? Well, it looks like we've got a lot of real estate buffs, right? It's location, 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 right? See, if I got a house like I do, that's right on a lake, is that a good location or a bad location? Or would you rather have a house? I'm a big boater, ladies and gentlemen. When I'm done, I'll be on the jet skis and enjoying the day. But if I have a house here that's next to some railroad tracks, right? Or a road, what's a better location, right? Next to a landfill. Yeah, there you go. I'll tell you, if this is the same house, location is the most important thing. Does anybody know what the most important word is when it comes to trading? What's the number one most important thing? No. Price is important, no question. Actually, let me say this. When it comes to the trading business, well, let me say it that way. When it comes to the trading business, I'm not talking about charts. What's the most important thing? I think I didn't ask the right question or do it. No. Patrick, you're getting close. It's one word. It's risk. It's risk. See, if someone asks you what you really do all day, you manage risk. That's what you do. That's paramount, because if you don't manage risk, what happens? You blow up your account, right? Who's blowing up account here? I have. Okay? I learned a hard lesson back in year 2000. The date was 2000, April, I think it was April 4th, 2000. I got a massive education when it comes to risk. You know why? Intraday, I was trading a stock called Vitesse Semiconductor. And it went from 100 to 57 within a 1 hour time period. You know what? I had 6,000 shares. Guess what? I lost $250,000 in about a 2 hour time frame because my broker margined me out, and I got a great education in risk. Guess what? Risk is the most important thing I look at every time I get into a trade. So let's talk about risk in this trade, so you don't make any risk mistakes. If we control risk, we're doing things right. So if I go short here, I'm short in the market. You know where my risk is? I'm short right here. My stop is right here on the other side of opening price. Well, then Fausto's doing things right. Because you're not going to be around long if you don't control risk. Sounds like we're on the same page. So what I'm looking for is, I want to be I'm going to be really specific, because that's a great question, Hitesh. It's exactly what you want to be asking. If this is the open and I'm short here, I want to be 2 to 4 ticks on the other side of opening price. Just on the other side, okay? Because what just took place? Let's clean my screen up just a little bit. What just took place here? Well, when price went through opening price, I'm going to clean it up big time. Let's do that. When price went through, when price went through the open, again, I'll use the yellow dot as opening price. A cool thing just happened, ladies and gentlemen. See, most of the time, let's say I'm short. Okay, actually, let's do this. I'll redraw it. Let's say price went up, came back down, broke through the wall, and then headed lower, right? And I am actually short right around here. I'm in short. And I want this thing to come down. My stop is right here, right? But guess what else is there? The funny thing is when this thing came down, Richard, you're right on, buddy. Guess what? A new brick wall was put up. Price came down. Now there's a brick wall here. And so it's kind of fun now because I've got a brick wall that is, I'm just a little bit behind my brick wall. And so I know that a lot of times price will come up and bounce off that brick wall and come back down. So guess what? The numeric value of a tick, it depends upon what you trade. If you trade oil, it's $10. If you trade the ES, it's $12.50. If you trade the NQ, I believe that's $5. TF can be $10. ZB is $31.25. It depends on what you're trading. Okay, it's all about the same. Oh, Don, that's a whole nother subject, man. Whole nother subject. Volume is also important. And just so you guys know, there's two levels of volume that you got to focus on in trading, at least in my book. So here's the thing, and I'm gonna stick more on value on the subject matter because we can get into more questions later also. I actually read tape in a different way, so I'm not going to get into that, Albert. Reading tape is important. I actually have a program that reads the tape for me in a very specific way. So if I'm short, I now have this brick wall. My stop loss needs to be 1 or 2 ticks above that opening price so that uh, I don't get stopped out prematurely. I don't get whipped. And there are times when you're just going to get whipped. It's just the way trading is, and it works really, really well. So let me show you trades that, and I'm going to take examples from last week, today, whatever. Now, if you're in a trending market, there are days where price will never come back to opening price. That's just the way it is. So, yeah, exactly, Alice. If I'm in a trade and it keeps going in my direction, if I'm short, yeah, I'll keep moving my stop. I'll keep ratcheting it down, moving it just as things go. Absolutely. And I'll also do some interesting things with my my targets. And actually, I should get used to my audience a little more. Are any of you guys a little bit? Your winning percentage is just stinks. It's pretty bad right now, and that could just because of time with the system. Are you feeling a little bit discouraged, or if you're feeling trading's not for me, or you're feeling that I just lost so much I can't even pick up the mouse to put a trade on. Okay, well, one quick thing, and I only say this as a short-term thing because it completely blows out risk-reward ratios and all that kind of stuff. But I do this only for one reason, and I think everybody here will agree with me that trading in itself is 80% what and 20% what. You guys know? I love this group. You guys are really interactive, and it's a lot of fun working with you guys. That's why I'm kind of going into more thing. But trading is what? It's all psychology. Exactly. It's all psychology. And that's a big thing, and it's 20% mechanics. So what I would recommend you guys doing is just for a few trades and just for a short period of time. If you've been beat up a lot, when I take this trade, and this trade in specifically, all right, number one is I really believe in trading 2 contract minimum. I really believe that. Why? Because when you have 1 contract, you only have 1 place to get out. So if this is opening price, and what do you guys strike your trade? What's your most? No, I blew out 250,000. I was option trading at the time. So if this is opening price, guess what? Oil. Okay, let's say you're trading oil, which is a CL. If this thing breaks opening price, your first target is going to be 5 ticks. That's it. Target 1. Why? Because if you have 4 or 5 trades in a row and you just get 5 ticks on it, guess what changed psychologically for you? Everything, right? I don't want you to get arrogant, but it changes. I'm just dealing with purely psychology, nothing else. This messes up our values. This messes up everything else. I'm aware of that. But right now, I'm not addressing that. I'm addressing your psychology, and we got to fix your psychology. But Alan, John, Elise, Hitesh, Sheila, if you have 5 trades in a row that are winners, how are you feeling? Are we fixing that psychology? Yeah, we're working on it. Then you can then move to getting 10, 20, 100 ticks and start moving in that direction. Okay? So the first contract, we're getting out 5 ticks. The second contract, we're going to get 20, 30, 100 ticks on that. Okay? That's what you want to do. Again, I'm just trying to fix that psychological problem because then we can go back to our values. Then we can go back to things that are really important. And I don't want to get too much off topic, but that is a huge helper. It's something I found to be very exciting and helpful for me. So let's jump to a real chart real quick. Here's the TF. And this is just a few days ago. I'll wait for the charts to print there. And again, everything I'm showing you today, ladies and gentlemen, I want you to go look on your own charts and see it for yourself. So bring up a chart of whatever you want to look at. Bring up the opening price and paint the opening price with a horizontal line and take a look at it. So I've got the TF, and my indicator does all this for me, okay? So what do I have going on here? Well, we've got this red line right here. What does it do for me? All it does is print 9:30 Eastern Standard Time. Now you're going to say, well, John, it's 8:30 on the bottom of your screen. Well, I live in the Central Standard Time Zone. Okay, I live in the Central Standard Time Zone. So for me, it's 8:30 in the morning. But my indicator automatically draws opening price. Now, is that something that's absolutely amazing? No. I mean, it's a no-brainer, okay? So let's look at opening price. Let's look at what happened on this day. This is not long ago, a week or two ago. But what happened is what I'm really interested in. Look, price loves to trend the first few minutes of the day. And getting back to the topic of what we're talking about, this trade usually happens in the first 3 to 5 minutes of the trading day. So it's like clockwork. See how price came down? And what did it do right here, ladies and gentlemen? Well, there was brick wall here, right? See the brick wall? What happened? Price came down. You know what? Let's blow this up. How's that? Oh, that's even better, right? Now we're having fun. Okay, so price opened up here. Went up, came down. Now, if this is opening price right here, what's going on? It's what, ladies and gentlemen? It's a brick wall, right? So we got our brick wall here. Let's draw in our brick wall. And this is just for fun, but this is really what's going on. We got a brick wall here, and it's right there. Price came down. What happened here, ladies and gentlemen? It came to within one tick and shot right back up, right? What happened, right? We broke down the brick wall. It's gone now. What happened? Drop. Boom. Okay? And that happened within the first 19 minutes of the trading day. How long do you want to spend trading all day long? This trade took 20 minutes. You're done most of the time. And go ahead, look at all the charts you want. This trade will happen the first 3 to 8 minutes of the trading day. If the psychology of every financial instrument seems different, does this strategy work for every instrument in the same way? It's pretty similar, but Hitesh, I'll tell you, each index has its own little nuance and its own little personality. And that's something that you'll have to get to know over time. Okay? So we see how important opening price is. Now, what happened? Okay? Price came down. When price comes down, what happens, ladies and gentlemen? A brick wall is re-erected in that area. Look, there's a brick wall here now, just like I've been talking about. Right? Here's your brick wall. Price came up. What happened? Knocked this brick wall down. Bam, came right back down. Okay? It's just, you can't tell me the opening price is not important. It's absolutely strategic. And whatever trading system you're using, you got to keep an eye on what opening price is. Because have you ever got into a trade, and this has happened to me, and the reason why I bring it up, but do you ever get into a trade, and let's say, oh, I'm going to get into a trade long right here, and it goes a little bit your direction, and then bam, you get smacked so fast, and you're like, what in the world took place here? Well, a lot of times, one little landmine, I should say, is just keep opening price up on your screen. And, it's respected. And if a price level is respected throughout different time frames, different things, you've got to pay attention to it. Okay. And I don't want to add too much to your trading system or what you're doing, because it can get pretty heavy, but it's an important level. So let's took me back to today. Oh, what happened today? Let's look at today. Go back to 8:30 this morning. Yeah, there are days when when it's going to be a little whippy. Now today was one of those days where, it just took off and it just dropped. So when the market starts coming down like this, you'd have your buy order up here. Oh, guess what? This market just dropped. And that's just the way it is some days. And it may never see opening price the rest of the day. But the question you got to ask yourself is, did opening price ever get respected? Absolutely. Well, there it is right there. Look at it. What happens, ladies and gentlemen, when price comes to open? Because if this is opening price right here, that's opening price, right? What happened? Price came all the way up. What took place? Oh, there was a brick wall in the way, right? There's your brick wall. What happened? Price came up, bounced off the brick wall, came right back down. Guess what? Knocked down the brick wall. There's your buy right there. Now, this trade happened later in the day, but what I do in my own trading room is if these trades present themselves the first few minutes of the day, which they generally do, then I take them. Yeah, there you go, Hitesh. There you go, buddy. So, like I'm saying, I only have a short time today. I just wanted to show you guys something that's really significant and easy to make money. That's a whole nother ball of wax, Brett. You can trade options on this. I would trade the weeklies, but you got a whole nother ball of wax. And what's the biggest thing in the morning when it comes to option trading? Volatility, right? So this is the biggest. This is huge when it comes to option trading, and you want to be a seller of options, not a buyer of options. What you're doing on that. So just keep that in mind too. So I got a little bit of a job for you guys to do if you want to do it, but just go back and look at history. Look at the last few days. That's all I got to look at. How did opening price react? Now tomorrow we're going to have what going on in the markets? FOMC, right? Very, very choppy day. You got to be really careful with what you do. And price tends not to break out. So you got to be really, really careful. Not much happened this day. Just kind of oscillated a little bit. Let's just go back one more day. And then just got a couple cool things I want to show you also. There you go. Look at that. See, this is when it happens in the first 3 minutes of the trading day. See, I'm watching this trade from 9:30 to about usually about 9:50. Every day you'll have a good trade, because look what happened. 3 minutes into the trading day, boom, right through there. Okay, price came right back up. What happened? Brick wall, right? Boom. There was no trade because it shot it down. So that's what we love about this. So check it out. And this is just one of several trades that I take in my time trading room that you'll like. So I got a course that's called 1K a week. And we just take trades. See, all I trade is the first half hour of the day. That's it. So I trade for about 40 minutes out of the day and I'm done. I don't trade all day. Why? Because I can't sit around all day and watch the markets. I just cannot physically do it. So if you just have a $2,000 in a trading account, I'll show you how to use these trades and potentially make anywhere from $200 to $300 a day. And just 30 minutes. This trade happens when you have volume and you have volatility. And that's what you have at the open. And that's when I take these trades. And there are many days where you make 20, 30 ticks, which is $200 to $300 in the first 30 minutes. And, I've been doing this for years. And these are some of my best trades on the E-minis. And I'm also going to show you the market maker moves in the first 30 minutes of the day. You see, what people don't realize a lot of time is the morning trading sessions are like different games, such as football, baseball, for example, and soccer. Well, the first 30 minutes of the trading day, it's as if everyone's playing soccer, okay? It's a soccer game. Well, guess what happens from 10:30 to 11? It's not soccer anymore. It's football. And a lot of times, depending on what system you're using, the reason why your system may not be working is because it's just a completely different game. And if you don't realize that, that's one reason why you could be losing money also. So here's what you get with my 1K a week course. It's 6 modules, 3 powerful trades, and only take. It's designed to make $200 to $300 in a morning potentially. Now again, this is going to be different for everybody because you and I trade differently. Now, when I take one of these trades, guess what? I like to have between 5 and 8 ticks of risk at most. That's it. Small risk. My targets are 5 and 20. I want to make 4 times as much as I do. And we're talking about the TF, we're talking about the ES, CL, GC, I can't even read that, GC, which is gold, the ZB. This works in a lot of markets. So now when I trade in my room, I'm usually looking at the NQ or I'm looking at the TF. I'm looking at one of these two. Because they're so much easier. I don't trade stocks, Brent. I am not a big fan of trading stocks or day trading, and that's just me. And there's tax reasons and there's computer reasons why I don't do that. I think futures are so much easier than stocks. All the modules are pre-recorded, and you can learn at your own pace. And each of the 3 trades is covered in depth with multiple examples. Now, here's one of them. I just talked about opening price. And again, go take a look at charts and look at opening price and see how significant it is. It is immensely important, okay? So, immensely important. And I'll try to show you a 5-minute chart on the ES also in a little bit. So the opening price trade, I actually do this live in my trading room, and I'll show you how to take advantage of it even all day long, and also how to avoid getting fooled. Now, I showed you one of the biggest things that fool people. The brick wall idea, guess what? You got to picture that brick wall up there because there is a brick wall, and that's one of the little games they like to play with you. So hopefully you like that example, the brick wall, and it made some sense to you. See, I'm one of these guys who, you ever have in college or high school, do you ever have one of those teachers where they tried to sound so sophisticated and they tried to make you think they're so smart and try to make you think that how intelligent they are, so they tried to teach in a very difficult or challenging style? I don't believe in that. When I teach people, when I do things, it's kind of like Mohammed, you and me, we're old college buddies, and we're heading out to dinner one night, and you're like, John, what do you do for a living? And I rip out a napkin, and I kind of start penciling what I do, and I make it real simple, real easy for people to understand what I'm doing. That's kind of why I like to teach, because I don't care how sophisticated I sound or how intelligent you think I may or may not be. It's more of, do you understand the concepts that I'm trying to teach you? And more importantly, I like to make you feel that you are an old buddy of mine and we're having a fun time and we're taking the mystery out of what's going on in the market. So that's kind of how I approach things. And this is how I strategically use the opening price for both long and shorts, because you know what? There's some days I have no clue which way that thing's going to go. But guess what? It goes in one direction or the other. There's also a trade that happens 15 minutes into the day. And again, I'm kind of giving you some of the secrets that happen during quote-unquote amateur hour. Do you know that 15 minutes in the trading day, there's another big move that happens? And I'll explain that to you in this course. And my indicator picks up all this stuff for you. So it sets up your buy and sell. It points it to you. And you can enter this trade with minimal risk and minimal getting washed and rinsed. And coming into 10 a.m., guess what happens? It tends to be a news time, right? You got news coming out, and there's a specific way to trade that too, because there's a lot of games being played in news. And I really dig into the secrets and what they do at news time to make money at 10 o'clock. So think about this. We're making money close to around 9:35 most days, 9:45, and 10 o'clock. So in a half-hour period, you generally have 3 trades that take place most days. And this is Eastern Standard Time. Eastern Standard Time. So how cool is that? Your first half hour of the trading day, you got 3 trades that potentially could be coming up. And I'm going to tell you where to find the best sources for news, which announcements move things, which ones don't, and how to take the maximum advantage of good or bad news. Because sometimes there can be great news, and what do? They slam the markets, right? And then sometimes there's terrible news, and what happens? It takes off, right? So I'll get into that a lot, and we'll try to show you how to set you up for profit targets, trailing stops, minimize potential losses. Because what's the number one word in trading, ladies and gentlemen? Risk, risk, risk. Manage risk. Very, very important. So protecting your capital is the biggest thing, right? Absolutely. And that's why we automate our stop method. So everything is automated. That way, you're not moving your stops. You can move your targets to a larger target, but your stop is what your stop is, and we're not going to increase it. I'm often in a couple other trading rooms out there, and they're moving their stops on oil to 20 to 30 to 40 ticks. You can't be doing that. Not many people can handle 2 or 3 losses in a row for 30 ticks. That's going to just destroy your psychology. If you want more information, go to investtosuccess.com/1KW. But also, I'm going to include 3 extra bonuses if you sign up today. Number 1, I'm going to give you my indicator. My indicator will print all this stuff for you. It will do all the work for you. So because I want you to focus on the trade. I want you to keep your eyes on the screen. Now, again, I don't know what you've been doing in the markets, but I like to keep my eyes on the chart, just like you keep your eyes on the road. And it's important that you focus in on the trade. So you have less chance of missing the trade because the indicator is going to point it out there for you. This is a $500 value, ladies and gentlemen. Number 2 is I'm going to also give you a course on trading psychology. And you're going to be able to predetermine your level of success, minimize emotional trading, and focus on the mechanics, and give you some successful money management strategies, which is setting up your daily routine to keep you in the zone. Very important part. Trading in the Zone by Mark Douglas. It's a must read. We're going to take what he did to the next level in this course alone. A $375 value. Trading with volume. Oh gosh. Do you know that there's 2 dimensions to volume trading? Something that's important to learn. Both dimensions. Does everybody know what both dimensions are? Probably some of you don't. There's 2 dimensions when it comes to volume. I'll write them out here for you guys. The first dimension is horizontal volume. Or actually, the first one is vertical volume. And all of you guys are familiar with vertical volume, right? Vertical volume is volume on the bottom of your chart, right? Well, there's also horizontal volume. Horizontal volume looks like this. Market profile. Very important to know those 2 things. Very important. So I'm going to show you how to trade with volume, a $200 value also. So you're probably asking, what's this all going to cost? Well, I'm going to make it real easy for you guys. Because, how much would you be willing to invest in your own education? $1,000 a week. If you add it all up, $1,000 for my indicator, custom indicator, the trader's mindset, trading with volume webinar. That's $2,000. A lot of courses can charge up to 10 grand for this kind of information. I'm not going to charge that to you today, but I'm not going to charge you $995. I'm not going to charge you $2,071 or even $1,000. This is going to be a no-brainer. For a very limited time, this is going to end very soon. It's only $47 because I want to prove to you that what I do works, and I'm going to put my money where my mouth is, because guess what? Go to investwithsuccess.com/1K a week. Get started today. This is a no-brainer. You're going to learn things that are absolutely going to transform and enhance your trading. I'm going to take all the risk out of it. I'm going to take all the risk out of it. 100% money back guarantee. You sign up, you don't like the course, then 90 days, we'll get you your money back. What do you have to lose? Okay. Full refund, no questions asked. We make it real easy because I believe in what I do. So now you don't have any excuses left. Plus, here are two great reasons why you need to sign up today. Number one, this is not going to be available very long. Two is I reserve the right to raise this price at any time, which we'll keep it open for the next day or so. But we're not going to let too many people get involved. The second reason is if you sign up today, I'm going to give you one fast action bonus. And I'm going to only offer this to the first 47 people in this room today. Get the 1K a week. I'm going to give you access to my trading room for a week. If you want to trade with me, you get help. Now, guys, you get support with this course. If you're in the trading room with me, I'll help you out. But for $47, I'm not going to call you back. I'm not going to. I've got elite students that pay me $8,000 to $20,000 for one-on-one help. And for $47, I'm showing you some phenomenal things. If you need help in the trading room, I can help you there. And I just want to be honest with you because I don't want to set unrealistic expectations. So see me in action live. Get your questions answered. There's no hidden charges. There's no auto renewals. Nothing like that. Starts next Monday. And again, this is not a marketing gimmick. I can only take a limited number of students, and that's it. Okay? We do limit our rooms. There you go. investasuccess.com/1KW. And, think about it. If you don't take action now, how many things will be different in the next 6 months from now, a year from now? And how much can you afford not to take this approach? So please join me. Go to investasuccess.com/1KW, and let's see if I can give you some hand in what you're doing. So with that, I just want to thank everyone for joining me today. Again, I really wanted to keep things simple and really, trading is a journey. It's not a one-stop process. And you're going to learn certain things, certain areas. And sometimes it's just learning one little concept that can absolutely change your trading. And here's a quick little story. And I think I got like 1 minute. I was down in Boca Raton trading at Schonfeld Securities, and there's 2 traders sitting next to me. One trader was making $100,000 every month. The other trader was just about barely paying his rent. Do you want to know the difference in their systems and what those 2 people were doing? It was one little thing. You know what that was? The trader who was making money, their stop was just 2 ticks greater than the other guy. And that was the smallest little thing that made the difference between one person making $100,000 a month and the other guy just barely making money. So it's getting these fine details that can absolutely make a difference. So with that, I know I'm at my time for the day. I just want to thank you for joining me. And it's just been a pleasure having you guys. And hopefully I'll see you guys next in the future. And take care. God bless, and have a fantastic day.